Good day, everyone. Today, I'm going to walk you through the balance sheet and profit and loss statement of the real property investment company I am working on. Zero is the accounting software used by the company. This reports for the months of January to February 2025. The company is fairly new. It started operations on the 1st of January. One of the properties is a residential property, which is targeted for long-term rental. The other property is a beachfront property and is for short-term rental. Vacations and company functions, such as team building activities, are what it is aiming for. Assets include the bank account, and fixed assets. Combank AUD is the main bank account. It shows in the balance sheet. PayPal USD and PayPal AUD are mainly used for multi-currency funds transfers. They are zeroed out at month end and do not appear in the report. The two rental properties were purchased through mortgage loans. The balances have been reduced with the monthly amortizations paid for the 2 months since acquisition. GST is the only current liability shown in the report. These amounts are payable and are owed to the ATO, or the Australian Taxation Office. This is a result of GST on income being greater than the GST on the purchases made. The mortgages on the real estate properties are shown under non-current liabilities. The balances of these properties have been reduced by the monthly payments made to mortgages. The owner's equity or owner's investment of 3 million has been reduced by the net losses incurred for the 2 months of operation. Going to the profit and loss statement, rental income is the main source of income. The expenses are a bit too high, especially the mortgages. And the net loss for the 2 months reduced the owner's investment by 32,238 and 62 cents. This is what I advised my real property investor client. The fact that the business is just started is an important factor to consider here. The company needs some more time to gain traction in the property rental business. It is still too early to gather data, but these are some considerations that need attention. A drop in the rental income may be due to seasonality and pricing strategies. Advertising goes hand in hand with seasonal demand, for which research must be done thoroughly. The mortgages seem a bit excessive. This greatly affected the expenses that must be paid regularly each month. Another mortgage lending company may be available, which could offer lower rates. The properties generated more rental income than direct operating expenses. The challenge is high financing costs, as shown by the mortgage payments. Property management fees may need to be renegotiated. Cleaning costs may be optimized through better scheduling. The 2.9 million bank balance is strong, but the consistent losses may eventually erode the cash reserves. That's all for now. Thank you.